Now, a new report is urging Australians to keep a close eye on Europe's economic fortunes this year. Deloitte Access Economics has called its latest report Eurogeddon.
Quite telling. It's predicting Europe will get through its debt crisis, but warns there will be consequences for Australia if it doesn't. Chris Richardson is the Director of Access Economics and he joins us now from Canberra. Chris, can you tell us, there's really two paths that Europe could go down. It could muddle its way through or it could fall into a flaming heap. Why do you think the scales tip on the side of muddling the way through?
Basically because the central bank in Europe is pumping out a lot of money. It says it's not supporting governments, it's only supporting banks. But the cheap funding that it's putting out going to the banks is partly making it back to governments, to the bonds being sold by Greek government or Portuguese government and so on. That means the sticky tape is holding surprisingly well. And if it keeps holding, and admittedly, no guarantees, but if it keeps holding, then Australia will have a better year than I think many people have realised. We've talked ourselves into a real funk.
Worst case scenario, if Europe doesn't manage to muddle its way through and those little bits of sticky tape start peeling off and the wheels come off the cart, what will that mean for the Australian economy?
My guess is it would mean something very similar to the first round, if you like, of the global financial crisis. Unemployment would go up, company profits would take a big hit. Federal government would have, of course, no chance of getting its surplus for the coming financial year. But probably not a recession, not a technical recession. That magnificent momentum we have in mining, the huge mining projects that are getting built at the moment, that gives us a degree of protection not available in the rest of the rich world.
We've had the World Bank warn that you can't necessarily rely on the growth in the developing world in China and India to continue at quite the same rate of growth that it has in the past. They were warning that we could see unemployment rise quite sharply if that were to go down that line. But you think the federal government still has enough momentum from growth and enough shots in the locker to prevent a recession if things did go pear-shaped in Europe?
I think so, though in fact it wouldn't as much be the federal government as the Reserve Bank. Remember, interest rates are rather higher here than they are in the rest of the rich world. That's a lot of ammo, if you like, that the Reserve Bank could fire if necessary. Now again, the if necessary is a key. There's a reasonable chance that Europe doesn't blow up, in which case my guess is interest rates go nowhere in Australia and the economy is stronger than expected. But yes, Europe the key for 2012.
And we'll just have to see if they do indeed stick to that very steady timeline they've set for themselves on the budget surplus. Chris Richardson, thanks very much for joining us.
Thank you, Melissa.